Hello to all our viewers and listeners. We are back with our roundtable, the first roundtable of the new year 2025. Hi, guys. We are here with our regular panelists. Steve Soretsky is out in Vancouver. How are you, Steve?
Doing well. Looking forward to another year of this.
You hear
People
this?
aren't sick of us yet.
Yeah.
Hopefully.
And the year started with a lot of news, so we'll get to that. John, you are with me out here in Toronto. How are you
Yes,
doing here?
very good. It's a chilly day in Toronto today,
Yeah,
but otherwise beautiful. Yeah.
your sweater game is strong today. It's back.
We can bundle up.
We expect you to keep up the standards, and you are. But I was saying to Steve, we've been having some gray days, and it's nice to have sun, even though it's very cold here in Toronto. Probably more temperate in Vancouver and gray skies. And I guess over to you, Steve, for more on Vancouver and the market itself and what it's like right now.
Yeah, I mean, kind of curious John's thoughts. I think it's, just getting back into the swing of things, and it's a little hard to draw any conclusions right now. I think obviously early January. I mean, I think activity wise seems pretty steady, pretty active for what is like basically the first or second week of January. So I don't know. I guess we'll probably get into some thoughts and forecasts moving forward. But wrapping up what was kind of a busier end to 2024. I mean, it started off painfully slow. But kind of zooming out, you look at sales for the year of 2024. They pretty much came in right in line with 2023, which was historically a very weak year. So just for context, we had 40,000 sales in 2023, and we had 40,000 sales in 2024, which is the peak record was in 2021. We had 70,000 sales for the year. So just to give you some context of how much we've gone from raging bull market to really the slower market, the long-term average is 50,000 sales. So we're still well below trend, even though we finished the year off relatively strong. Um, Kind of the last 2 years, if you're in the real estate industry and you're, depending on real estate volumes, it's been a challenging few years.
Actually, I want to get back to that because I need you two to remind me of what the shape of last year looked like in terms of when sales picked up and when they didn't, and how that changed from the year before. Before that, John, it's very early days in January. What's the take on the Toronto market right now? What are your early feelings about it?
Yeah, I mean, again, it's really tough to say how the year is going to play out. We'll probably get a better sense over the next, I'd say, 6 to 8 weeks. I think like the first 2 months really sets the trend for the year, and we kind of have a good sense. Again, this is when most buyers start their search. This is when most people enter. This is typically January, February, typically, and again, I think it's counterintuitive for most people. They're usually the most competitive months, from my experience, at least in Toronto. Not the most sales, but the most competitive because it's when a lot of buyers enter the market, but there's not a lot of inventory. So you typically see homes getting a decent number of offers in January, like higher than we usually have in like April and May, because April May we have ton more listings. So hard to say. We'll know probably by next month's episode what things are looking like. But looking back at last year, the stats very similar to what Steve said. I posted a tweet the other day. I think the GTA had about 67,000 sales, which is actually up a little bit over last year. But 2023 and 2024, both of these past 2 years are pretty much the lowest sales volumes in 20 years in the GTA. I think the last time sales were close to the high 60,000s was in 2001. So unbelievably soft volumes. And again, this is largely a response, like just the market's response to unbelievably high prices and high interest rates. And I mean, the interesting thing to me is that the market was pretty stable. I mean, like, we've seen some softness, but it's just fascinating to think you have like 20-year low in sales volumes, and it's and the reason I say that is because I posted this chart yesterday on Twitter, and I saw someone say, okay, this is the beginning of the bubble bursting and the market's going to tank, because they saw that I posted that sales were at 20-year lows for 2 years in a row. And in my mind, I'm thinking, I mean, if that was going to happen, it would have happened over the past 2 years because this year we're probably going to see sales pick up because rates are now going to be in the high threes or low fours rather than six, right? So again, not that we're going to be in a booming market necessarily this year, but probably higher sales volumes, I suspect, than last year and the year before.
60,000 agents in Toronto.
That's yeah, exactly.
But a sale a person.
I mean, I think a third basically don't do no transactions pretty
Yeah.
much.
Yeah. So just, John, just for added context, we had, so in 2008, there was, in the global financial crisis, we had 37,000 sales for the year in 2008. That was that was the previous low. So for the last 2 years, been running at 40,000. Keep in mind, obviously, the population and housing stock has grown, quite significantly over the last decade plus, right? So kind of puts you into context. We are really kind of running at almost crisis levels of housing activity. So, you know, to expect a higher number than that this year, I think is very reasonable to expect. Um, but yeah, I think it'll be interesting to sort of see where we actually shape up. If we actually get back towards the long-term average of 50,000.
So my question for you too about the shape of what last year looked like. Coming out of COVID, we saw something where prices stayed the same, similar to here, but it was because there was a tremendous run up early March, as surprisingly people reacted to COVID in a way that the lockdown that we didn't expect. And then as it started to fall over the next 2 years, it kind of that run up had insulated against the prices really dropping overall. But we're not really seeing that last year and the year before. It seems that has been more of a story of the sales have been low, the listing people have not been listing. They've been holding back. The sellers have been holding back when the buyers have been holding back. So is that really what's keeping the prices up? Like you would expect with such historical low volumes, prices to move. At least the layperson would.
You would, and I think, I mean, to jump in, the price declines in the at least in the GTA, and I'm pretty sure in the Vancouver area, primarily happened in 2022 when
Yeah.
rates started increasing. So we peaked around February. I think prices in the GTA fell. I mean, I can't remember off the top of my head, maybe 15, 20%, something like that, between February and the summer. And again, it was a bit of a rapid decline. Again, people caught in two transactions, market slowing down. And this is why prices fell relatively quickly because people were caught in two transactions. They effectively became distressed sellers. Since then, it's largely been flat for 2 years, right? And to your point, I think the stability in the low rise market is largely because there's not even with low sales, it's not like we're oversupplied for houses. The market's pretty balanced, even if we have 2.5, 3 months of inventory, that's a level of inventory prices are pretty flat, which is what we've been seeing. What's more interesting, I think, is that the condo market has been somewhat stable. Like they've dropped a little bit more than houses, but last year we hit a period where there's like 5, 6 months plus of inventory. Stuff wasn't moving, and still, like prices dipped a little bit, but not as much as we would have thought. Given the conditions. Like if you're a seller trying to sell a small condo last year, I mean, it wasn't moving. I mean, there's all sorts of news headlines, if you follow, right? Like just nothing out there.
Yeah. Question to push back on that. So is it fair to say that, prices have been relatively flat-ish, more stable in the condo market than expected as a result of just a lot of stubborn sellers that are just not reducing their prices to levels that will actually get the inventory to clear? Which suggests that maybe the prices should actually be lower or continue dropping. Like if you're kind of like, hey, you know what, I tried to sell in 2024, it didn't work, I took it off the market, I'm trying again in 2025. Like, are you gonna actually have to actually finally reduce your price a bit further to move it if you want to move it in 2025? So is that
No,
a case to be made for lower prices this year?
yeah, 100%. But I think that is a natural reaction in a slower market. Like sellers are stubborn in a slow market. It's why a lot of times you read, if you read that prices can shoot up quickly, but they're usually sticky on the way down because sellers don't want to lower their price. Even if they, and this is the interesting thing, it's like even if they're up 200 grand from what they bought it at, they're looking at the peak prices and think they're actually down 100 grand or 80 grand, right? Which is why they have this bias to not lower much. And what we're seeing is some of them are just saying, forget it, I'm just going to rent it, right? Which is contributing to this massive flood also of rentals,
Mhm.
which is causing the rental market to be sluggish. So 100% that part of this is just stubborn sellers, but I think that's just like a natural result of, what most sellers would do. And then you might just see some get distressed, but we haven't seen that. And I think that's the most interesting part. We haven't seen as much like people throwing in the towel and, just taking massive cuts.
Yeah, I'll give you like an example. Like we dealt with this recently where it's like, you know, people will follow this show, they'll follow all of our work, they know our analysis, they reach out and say we want to hire you because like we trust your expertise and your judgment and it's all documented online. And so they hire you and then you go in there and you give them the price and go, "Oh, no, no, no. We don't that's no, 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 no. That price isn't going to work for us." And so it's like, one example is like, okay, we go in there in a listing presentation. We say, listen, we think your number's kind of a 135 to 1.4. And they say, well, we were thinking more like 1.5. At the top of the market, it was probably 1.5 or even a little bit more. And so it's like, well, let's start at 1.5. And like, well, that's really not my recommendation, but you're the boss. We'll start there and we'll adjust and the market will dictate what it's going to dictate. And then a month later, it's okay. Well, let's drop it to 1.45. And it's like, well, again, we told you 1.35 to 1. So it's like you're kind of just like slowly coming to reality. And it's like even as the listing agent, again, that's someone that has reached out to us. We've provided our analysis. We told them exactly where it's going to move. They don't always listen. In fact, quite often they don't, and they have to kind of come to their own realization. And eventually it gets to that price target that we've given them off the bat. But yeah, the psychological brain damage people put themselves through is amazing, right? They're anchored to the 1.5 that should have been 24 months ago.
Yeah.
Not realizing that, well, I mean, your house also went from 1 million to 1.5 million over the last 4 years. So like, let's put this into context that like you didn't quite hit the top, but you're still getting a pretty good number here. People don't think like that.
No, they don't.
Well, I guess one way to think about it is if our wage growth has been so stagnant over that time, maybe people are thinking this is what I got to live off of. And that's kind of the mentality people have now. But aside from that question, I do want to put it back to you. We have been around this question of when is the other shoe going to drop for a while. First, we heard in the pre-con a sector that there were people hanging on who were getting evaluations a lot lower than appraisals a lot lower than when they had bought things for in the GTA. John, you did a presentation around how banks have come in and sort of turned a blind eye to
Mhm.
prop up some of those appraisals. And we wondered how long could they do that? Then we have the story of a record number of completions in the GTA, all of a sudden coming online. Would that change the rent calculus? It has a little bit. You reduce the foreign students, you reduce the temporary workers. It looks like rents are dropping in the GTA now. So how long can people hold on? Like this is nobody can figure this out. Previous guest of our show, Ron Butler, I think had a guest from the Veritas principle. Some of you two
Mhm.
speak to a lot, and they had a whole show just dedicated this week or the last week to when is the condo, the merry-go-round going to stop?
Mhm.
And I just feel like we keep asking that question, and all the experts say, well, it could, we just don't know when. So my question is why? Why can't we square up all these numbers and know that clearly some kind of price adjustment or some event is coming?
So that's a big question. I don't know if you want to start, Steve, or if you, I mean, listen, home prices are, um, it's a difficult question. So I get you're basically saying at what point do prices fall, right? Because they're so elevated right now. I mean, the funny thing with the Veritas, Anthony, who Steve and I both know, he's talked at his conference. I mean, he's been pretty bearish for a while. And he's doing this thing where he would do these mystery shopping, buy pre-con condos just to look at the pitches or whatever, but then like get out of them, after the during the 10-day cooling off period. And the joke was always that, if he had actually kept those units over the past 10 years, he would have done very well and he would have made a ton of money. Obviously that the math is not playing out as well now. Anyone who bought in the past 4 years pre-con is going to be struggling. Listen, it's hard to say. We're probably going to see some pressure in the market in the months ahead. We're still, we have to keep in mind that we still have an economy and a market that was growing by 1.3 million people per year in a country that's only building 200,000 homes, right? And that is not a justification for why house prices should continue to surge because that is baked into today's prices, right? So will prices fall over the next 2 years? I mean, that's possible because over the next 2 years, the math's going to change. We're going to have negative growth and 200,000 completions per year, right? So will that put pressure on rents? Possibly. And, will that put pressure on investors who are renting their units and put them in a tighter position? For sure. But I don't think we're in this environment. We're going to see this 40% decline in prices or 35%. Like, again, I think there are too many things that policymakers are doing. And you talked about it, like the banking regulator turning a blind eye, pretending these newly completed units that are finishing today are actually worth what investors paid for them so they don't have to top up their down payments, even though they're worth about 20% less, is again part of like the bank's system to prop up the market, right?
Extending amortizations,
Yes.
increasing CMHC mortgages up to
Yes.
1.5 million. I mean, we could probably, there's probably going to be a longer list that we'll keep adding to it over the next 24 months. But yeah, I mean, it's certainly not I don't know if I'd call it a free market that we
It's not a
have
free market.
in housing.
Well, that leads us nicely to the next 24 months. Will we see the same kind of policies over the next 24 months? We've just seen Justin Trudeau who finally nudged, shoved, I don't know what you call that movement, out of his position as leader of the Liberal Party of Canada. So resigning, I believe that he's going to stay on as Prime Minister at Parliament's prorogue until a new leader of the government can be, I guess, nominated by the party, after which I think a high likelihood of an election and a new government, very likely led by Pierre Poilievre of the Conservative Party of Canada, will be coming into Canada in the next year, sometime this year, later this year. So will we see the same when it comes to a couple of things, housing market policies? And I guess more broadly, will we see any profound changes when it comes to our overall housing crisis, affordability wise? Steve, let's start with you. Do you think these behaviors are going to continue, this propping up, this not really?
Um, I think that, having conversations with some people in that space that I think it's going to be very much a hands-off approach. I think it's just going to they're going to let the market do, I think, what it needs to do, which is, I think it's going to clear. Like, I think like ironically, whatever your politics are, like the funny thing is like the crisis kind of fell onto Trudeau. Like he created it for sure. He helped exacerbate it. But like, ironically, I think what's going to happen is I think we're in for a period here for the next 2 to 5 years where I actually think you're going to have flat to no house price growth. Whether it was the Conservative Party that's going to be leading it, or the Liberals, or Jagmeet NDP, like I think you were in for a period of stagnation, which is to say that what John just mentioned, you go from 1.2 million people to basically zero in terms of population growth, and all the housing that we started construction on over the last 3 to 5 years is now going to be completing over the next 2 to 3 years. So, like, I think it's going to be a market that's well supplied. I think we're in for a period of stagnation. I think that's already been happening. We've already seen it for certain segments of the market where there's been no house price growth for the last 5 to 8 years in certain segments. And I think that's going to permeate into other segments. And this is just not unusual, right? I mean, everyone's just so used to like 8% home price appreciation every single year because that's what the last 10 years has looked like. But you go back to the 1990s, John, there was no growth for 10 years. in Vancouver, no growth in the GTA for what, 10, 15 years?
Mhm.
You know, Calgary, there was no growth for 10 years from '07 to 2019. And so I think we're in for a period of stagnation. So I think from the Conservative Party, who's realistically going to be leading this government, they're actually, I don't think, have to do very much on housing at all. And the market's going to take care of the heavy lifting for them.
But I guess my question is that to John as well. Would you describe what the Liberal government has been doing as interventionist when it comes to housing? And would you expect the Conservative Party to let the market decide more? You know, we've talked on the show about, measures being taken to prop or keep house prices up. Justin Trudeau would say it pointedly. We cannot allow house prices to fall. And quite frankly, the majority of Canadians that own houses don't want to see prices falling. Would we really see a government come in and let the market clear it out?
Zero chance. I don't see that happening. I mean, even though, I think the conservatives try to position themselves on this free market, let the market. It's not housing's not a free market like we talked about. There's no way the conservatives are going to uh, reverse. I'd be surprised if they reverse the Liberal government's changes to CMHC, because like Steve said, I think part of that is to prop up the new housing market through government insured freaking mortgages. So we as taxpayers now are backstopping these overvalued pre-con condos through CMHC insurance, turning a blind eye on the fact that they're not worth what people pay for them. I don't think they're just going to let the market tank. Housing's not a free market. People pretend it is. The government is highly, highly interventionist. I mean, if you want to talk about free markets, every new builder of rental properties is getting basically the lowest rock bottom interest rates because they're getting government insured mortgages. They're like, the government is highly involved in the housing market. It's not a free market. And the reality is, I mean, if you listen to what Poilievre has been saying regarding housing policies over the past year or two, or since he's been leader, it's actually not that different from the Liberals, to be honest with you. Like, they have different language. The Liberals have the Housing Accelerator Fund, and Pierre Poilievre basically says, well, I'm going to do something different, but it's kind of similar. I'm not going to give them the money until after they've built all the homes. I want them to build homes around transit, but I'm not going to fund the transit until the houses are there, which is, I mean, a bit odd. So, I mean, the policies are really not different. And I agree with Steve that it's assuming the conservatives stay on this path of basically Canada seeing negative or zero population growth for 2 years, which I suspect the conservatives will do because it's politically popular, the market will naturally level off, and the funny thing is it'll look like a victory for the conservatives, right? After we've seen rapid growth for 10 years. But really, I mean, it's just, cutting population growth to stabilize prices. I mean, we've been talking about this for years. You didn't need a PhD to realize it was too freaking rapid, this growth. But every economist with a PhD was saying 1.3 million people's sustainable. We just need to change zoning bylaws, which is nonsense. You know what I mean? So, I mean, those are the narratives. It's like those economists are kind of largely what got us to this crisis. Some of the economists, the non-housing ones, have been raising the red flag about our population growth that kind of got us to this crisis level. The housing economists have largely been arguing we don't need to worry about 1.3 million people. We just need to upzone and the market will solve itself, which obviously isn't the case. So yeah, I think
So a couple of things to take note of here. I agree with a lot of what you said. Is you're just like in a different environment today, right? So it's like again, it doesn't really matter that it's going to be Poilievre or somebody else, but like he's going to be inheriting an environment where, let's be honest, I mean, mortgage rates probably they're like four is the new two, and so like house prices are just not going to see as much growth when the bond market says, hey, we're going to price mortgages now at 4% or 4.5%, or maybe it gets back to 5. And so that's number one. I think what's going to ultimately happen is there's going to be very little to no growth in the housing sector, right? Like the days of double digit home price growth, fueling this wealth effect and fueling investment in the residential real estate space. I think those days are gone, at least for the next 3 to 5 years. And so, like, if you're the conservative government, you have to ask yourself, where am I going to derive growth? If I'm going to push on something, if I'm going to push on a sector to get growth, I mean, I think it's pretty clear he's going to go to the oil and gas sector. I think that is in the natural resource sector is where they're going to deregulate and try to spur investment. And so I think housing is going to naturally take its course. It's going to be a very flat, boring market. And yeah, to John's point, I just don't think they're going to have to really do a whole lot. He'll probably take the victory for what is natural forces playing out. But I also think, John, it's like you got to run. Like, I think if you run like a decent economy, a lot of the things will take care of themselves. Housing partially taking care of itself, right? If you set reasonable immigration policy, you probably have reasonable rent growth. You probably have relatively stable house prices. Um, so I don't know. I think we're just in a very different environment. And to your point, I mean, at the federal level, there's only so much you can do to try to alter housing. I know that Pierre is very anti CMHC. We'll see if there's any changes that are going to come through that. Is he going to roll back the $1.5 million jumbo loans? I don't know. I mean, if you have flat to declining prices, he probably doesn't need to. Um, but we'll see.
I'm not sure developers would agree. And I think I take your point on oil and gas, but I think one of the conundrums for any politician going to Ottawa is construction and real estate has
Mhm.
traditionally been a part of the
Hmm.
Canadian economy as well that needs to be spurred on, as you were. So I do wonder how his ideological aversion to some of these institutions that are popping up will square up against this need to bolster Canada's economy. And I think that's the next thing I want to turn to. We've seen oil booms and busts before, and we've seen the impact on Calgary real estate. It goes up and then it goes really, really down. Um, Real estate, we forget, depends on people having jobs. Canada's position going into 2025 this year is not looking very good. The immigration question is an interesting one too. I'm looking at some research that I want to follow up in the new year as well. I really liked an analysis from Aziz Sandirji's from the United States, noting that English-speaking countries have a severe housing crisis. Countries like Australia and New Zealand's challenges were more understandable as their population surged over 30% in 2 decades. I think we can recognize Canada as being one of those countries who is trying to use this strategy to, quite frankly, I think it's part of our economic push.
Mhm.
So now we're reducing some of those numbers, the cheap labor, the things that we need for industry. We might try to make the oil and gas play. We've seen that boom and bust in the past. What do you guys think the prospects are for Canada's economy going forward? I dare we mention Donald Trump. Don't like to give him too much attention, but he wants to make us bring us to our knees, make us the 51st state through what is it? Economic pressure. He will
I,
tariff until we concede, is what he's saying. Not sure how much of that he means, but John, what do you think? Like, I don't feel like consumers are feeling that positive going into
they're
2025.
not. And I think you've raised a number of very good points. And I 100% agree with you. I think the one challenge that Pierre will have, even though the resale market will balance off, is that construction is going to be in the gutter for the next while.
Hmm.
Nobody is buying pre-construction investment condos over the next 2, if not 3 years, and maybe longer. I think that market is done. And so, what are they going to do to stimulate construction? It is a massive part of our economy. And you're right, Canada's housing price is very similar to Australia and New Zealand. We both did the same thing. All three of us were just like rapidly increased our population to drive up home prices. And you're right, with construction slowing down, it's a big segment of our economy. And again, it's a big driver of business cycles. So again, I think we're fine now because again, a lot of the units starting now were units that sold, a year ago. So, but over the next 24 plus months, we're probably going to see construction cool down, which goes, leads to job losses. And I think a lot of the people in the construction industry are worried, quite frankly, right now. They're just sitting there. Any condo developer just sitting there trying to figure out what to do. And many of them are contemplating converting their properties to purpose-built rentals. But again, I think that's also a challenging, obviously many of them will do it, but it's still challenging. We're in a declining market in terms of rents. Non-permanent residents are getting slashed. Population growth's going negative. So it's like they're making all of these investments into a softening market, right? So, it's going to be challenging, I think, for builders. And I think definitely that's going to be one of the challenges Poilievre is going to be facing over the next 12 to 24 months.
Yeah, I mean, I think like the uncertainty, obviously right now you don't even have a government that's functioning as able to even really negotiate in the best interest of Canadians. So, I think in terms of if you look at it and say, well, what are the impacts for the housing market? I mean, I think obviously the housing market trades off of confidence and sentiment, and if you're worried about Trump tariffs and what that might do to your job prospects. Will you be a little bit more hesitant to pull the trigger? I think so. So I think that's kind of going to be hanging over us. I think what's happening in the bond market and yields pushing higher. Obviously, the strength in the US is driving yields higher, which is driving Canadian yields higher, which is driving mortgage rates higher. So there's still like a lot of uncertainty here in 2025. And so, we come back full circle and say, what's the outlook? And that's why I said I think it's going to be a pretty flat, boring market here. Um, probably over the next few years. And so while sales activities might perk up off of their, 20-year lows, I don't think we're going back to a bull market anytime soon, which I think is going to be a disappointment for a lot of people, right? I mean, right, John, we talked about at the beginning of the show is all these people that tried to sell in 2024 or 2023, they're going to retest the market, some of them in 2025 and hoping for a better result. And I'm not sure that the result being a higher price is going to materialize. And people are just going to have to adjust. And same thing for people that are carrying, investment condos that are negative cash flowing $700 a month that saw, oh, okay, the Bank of Canada is going to save me here. They're cutting rates. They just cut rates by 175 basis points. But when you kind of zoom out, you realize that, hold on a minute, fixed rate mortgages really haven't moved a whole lot. So that's going to be the challenge they're going to have to work with.
So I want to float it. I admit it, less likely upside that I've been thinking about. It builds off of my theory that our population growth surge and what Australia and New Zealand has tried as well is not just to keep our housing propped up. It is our play to deal with our GDP problems. These are countries that need to up their productivity. We need to up our ability to compete. I do wonder how much low cost labor was part of that initial argument. And now we see a little bit of a stepping back from that. But what I wonder is going forward, there's so much global instability, right?
Mhm.
What are the chances that Canada, again, by selling our lifestyle, by being a safe haven for middle class people, just like Australia and New Zealand, again sees a surge?
And
We
population?
Yes, because and maybe we don't have the temporary worker or we have some kind of and where I'm going with this is if you have again tech workers getting shut out of the United States, we'll see to what extent that would happen. Trump is pushing against another part of his own faction right now that would like to see skilled workers limited, the whole H-1B fight.
Mhm.
I'm just wondering, and then we see Russia, if the cost of Canada's housing situation gets a little bit better, do we once again see a return of all these middle class people around the world that would like to stay in a safer place or in a
I,
place that's a little bit more conducive?
I think one thing to keep in mind that's important is that Canada's immigration numbers are still strong. We're still growing by just under 500,000 people per year. Our total population's declining because the number of non-permanent residents is actually declining by over 500,000 people per year, right? And it's the non-residents where we saw this massive boom. It's the non-residents, many of them were students staying in rooming houses and these terrible kind of housing conditions. This is where we are seeing the decline, right? And from the Fed's perspective, this is a temporary measure, right? They're going to do this probably for 2 years to reduce the number of non-permanent residents. Today, there's 7% of our population, I believe. They want to cut that down to 5%. And then after that, non-permanent residents shouldn't change very much. Like usually for every 100,000 that leave, 100,000 come in. It usually doesn't contribute much to our population growth. Most of the growth will, again, 2, 3 years from now, will be 500,000 plus people per year of new immigrants, right? So I do think that is going to be part of the play. I'd be surprised if they go to this supercharged growth that the Liberals went under, over 1 million people per year. I'd be surprised because I think people are far more aware of how population growth drives all of the not just housing, but a lot of the services that Canadians face, and you can kind of grow faster than your whole system could support. So I'd be surprised if they go much higher than that personally.
But note the nuance there, and I'm going to throw it to Steve. What I'm arguing is, again, selling Canada for middle class immigrants makes a
Hmm.
different kind of impact on our housing market than, let's say, the Liberals play for low labor uh,
Hmm.
and temporary workers and foreign students propping up, all these universities and colleges that probably had too many programs, quite frankly.
Hmm.
So that's a different play. What happens when, the global situation does not look good?
Hmm.
And again, this pointing out that Australia, New Zealand, and Canada especially represent a place where you can go and build
Hmm.
build your middle class family. I'm just wondering about whether we're not thinking about that upside pressure. Steve,
I mean, I think that you need jobs for people, for them to come here, and I don't think the job labor market's very strong right now.
what
I
if they
mean, I
have their
think
own capital?
that, sorry, say it again.
What if they have their own capital?
They still need a job,
Mhm.
right?
Yeah, I don't know. That's not my base case. I think that I don't think the politics really support it today. I think that the pendulum is clearly swung so far in one direction. I think it's clearly swinging back in the other direction, which is natural, right? I mean, I think when you see youth unemployment, it's the highest since 2008, and same with immigration unemployment, people just start to rebel against it, and so I think the politics are clearly suggesting that, and yeah, I don't know. I think that yeah, I just think that in summary, I think the housing market, I think it's kind of sad. Like I think we kind of we can argue about whether it's going to go up 2 or 3% or it's going to go down 3 or 4%. Like I think we kind of know like we're kind of we're heading in a direction where there's going to be very little to no growth for the next number of years. The investor market is going to be impaired for a number of years. The math doesn't work. It's going to take time for the math to come back and make sense again. And it's going to play out. And John talked about is housing bull markets, they go up really quick. And when they deflate, they deflate for a long time. And so, we've already gone through a bit of a correction here. And yes, sales are slowly recovering, but that doesn't necessarily mean prices, jump back to their all-time highs anytime soon. And so I think we're in for a period of stagnation. I mean, you can argue whether there's a few more people that come into the country because of visas and this and that. Yeah, I just that's not my base case.
Fair. And John, I'm feeling like your assessment is the same.
Yeah, I agree 100%. Yeah, I think listen, I think that the reality is too, we got to keep in mind that, I mean, Canada's looking less attractive as well. If you have a lot of different options, different places to move, Canada's very unaffordable. Like a lot of people are leaving for many of the reasons why people are leaving Ontario for Alberta. They can't afford a home, and eventually Alberta is going to become very expensive. Like these are like short-term solutions to a crisis, right? Um,
The
so
good thing with Alberta is they're building like crazy. So I'm more optimistic on that economy. I think that there's a ton of supply in that pipeline that I think is going to keep prices relatively stable.
well, and
Um,
I suspect they're probably building more low-rise houses rather than 400 square foot condos, if I'm not mistaken.
yeah, they build a lot. They build a lot of ground oriented because the numbers make sense, right? They're building a lot of ground oriented townhouses, duplexes, things of that nature. Um, Easy to build, cheap to build, lots of land. So yeah, I think they'll be fine. Yeah, it's gonna be like John, but like like we're just I think just in an environment today where again, I think mortgage rates is the big thing, right? I mean, when mortgage rates go down to 2% and you can't earn any money on your savings in your bank account, what do people do? They go out on the risk curve and they buy a pre-construction condo because rates are low. It's the only way to sort of park money. It's like a new bank account, and there's price appreciation. It kind of re-encourages or reaffirms that bias to that real estate is going to keep going up. And we're in an environment today where rates are stuck in the forest, and the prospects of future price growth are pretty bleak. And so that is just going to deter investors from stepping into the market. And so if you don't have that investor bid, which we know is what 60% of the pre-construction market.
Higher, yeah, higher than that for sure.
Yeah.
In
And how
Toronto.
much of it is how much does the investor play in the resale condo market? I'd argue in pockets like downtown cores, Toronto, Vancouver, I think it's 50%.
Yeah, well, maybe 40, 50, something like that. Yeah. Because
Yeah.
they're
So
about
like,
30% of the total market, right? And if you focus on the fact that they're more concentrated in Toronto and condos, yeah, probably 40 plus percent easily.
and so yeah, I mean like they're some of them are coming back, but certainly not to the extent that it was. So I just think you have a natural drag on demand moving forward until the math makes sense again. And I think the math is going to be hard to justify over the next 24 months.
I think the one interesting thing I'm finding now, I mean, I don't know if you see this, Steve, is like this massive change in sentiment. Like most people who I talk to now who have rental condos, like almost everyone is like, I wish I didn't own this stupid thing. You know what I mean? Like, I
Yeah.
wish, and it's part of it is because they're bleeding cash on it monthly. It's not going up. Um, they're having a hard time selling it, and part of this is certainly their own stubbornness and they don't want to lower the price. In some cases, they can't because it's not worth what they paid for it. So they can't go much lower. But, and the small condos have suddenly become very illiquid assets. And like Torontonians and Canadians in general, I think have a hard time wrapping their minds around real estate as an illiquid asset. But in a lot of countries, it is illiquid. Like, Canada is a bit unique. Cottages, of course, have always been historically illiquid unless it was sort of COVID and you thought you're going to become an Airbnb millionaire. But generally cottages are slow and small condos are becoming highly illiquid. And I think it's challenging for a lot of people because people don't know what to do. They feel like they're stuck, right? They can't sell it for the place they need. Rents are low. They're burning $1,000 a month on the cash flow. And like we have a lot of unhappy investors, and I feel like if you
Yeah.
look back at like 5 years ago, every article in Toronto, like Block TO, Toronto Life, all these stories about everyone making so much money as real estate investors, that is completely swung right now. And I think it's super fascinating.
Yeah, a lot of the calls we get is just like, oh, I just don't see the outlook for future price growth
Yeah.
being very strong. So like, why am I holding this asset? It's not like I'm producing a ton of cash flow. So
Hmm.
it's just like, well, like, what is the outlook here moving forward? So there's like, I may as well just dump it. I've made a bit of money. Let's get out. Let's redeploy the several $100,000 of equity that I have here, the down payment that I put into it 7, 8 years ago, and let's roll the dice somewhere else, right? And like, the idea of being a landlord in places like BC and Ontario now today, where government has swung so far uh, towards a tenant now that again, it's just like, you're in business with the government as a landlord in BC and Toronto. You're in business with the government, and the government is continuously changing policy to be less landlord friendly. And so I just all the confluences that are coming together. We're being told no population growth. The rents are already flat and declining. There's very little prospects for price appreciation. Mortgage rates are higher, and the government hates you.
like you really got to love the business to want to stay into it.
Or be in Calgary, where maybe the one market where maybe there'll be some job growth,
Mhm.
and maybe not have those factors. But you two have kind of anticipated my final question. For the average consumer in Toronto, and maybe Steve, you can adapt my story for Vancouver circumstances. So I just heard from a really good friend over the holidays, who I spent some of the holidays with. They don't love where they live in a suburb of Toronto. It's a very nice two-bedroom a condo, very spacious, a beautiful, and by Toronto standards, it's like Shangri-La because it's not a shoebox, but they don't like living there. And their plan was always at some point to get back into Toronto, closer to their work, especially as we see like move, work from home being curtailed more and more and more. And they haven't seen any activity in the two complexes. No one's coming to view the other units for sale. The open houses are crickets. And so her question to me is anyone ever going to be able to sell again in this area? And what is the outlook for 2025? Now, people ask me, but that's only because I'm adjacent to people like you. So what would you advise someone like that? If they move, do they try to rent it out and try to rent closer to where they want to be? Like, what are people's options right now for 2025?
Yeah, I mean, that's a good question. I mean, listen, the market will recover gradually. I mean, especially for larger units, like this one. The tiny ones are going to be a bit harder. But yeah, I mean, your options are you either just list and drop your price below your competition so you look more attractive. So you're almost setting the new price if you really want to move on, right? And again, I think that's part of it. You don't know what the other units in your building are priced at. Like to Steve's point, maybe they're still priced at 2022 prices, and you're looking at them and nothing's selling because they're over freaking priced. And that is a trend that goes on in the market. So, you got to look at what is a realistic value. And, if you're more realistic than your neighbors, then you're going to sell. The flip side is, yeah, I mean, if you don't want to sell, you feel like, it'll be a better investment 2, 3 years from now, which is a questionable if, then yeah, maybe you rent it out and rent a place downtown and you still have your condo that you own and you're renting in the city. And I've seen people do that as well. So I don't think there's like a perfect answer. It's personal preference. Do you know what I mean?
What about the
I think there
fear?
was
Sorry, Steve, just one last thing before we move to you. What about the fear that the prices will drop a lot fast or more in the suburbs? So if you do go to buy elsewhere, your purchasing power is really going to be reduced. If you're trying to make a lateral move, for example.
Yeah, it's hard to say. I mean, I don't know if I don't, it's hard to predict like whether we're going to see, and there are like geographical differences within metropolitan area, but I don't know if they're going to be that pronounced. And I don't know if I would make all of my decisions based on this idea that maybe it'll be, because if it's lower, if you think about as an aggregate, like let's just say condos fall 5%. Okay, even if they are lower in the suburbs, maybe they fall 7% in the suburbs, only 3% downtown. But it's possible that it is the reverse as well because the downtown has more small units, right? And you could have more people leaning towards larger units in the suburbs. So you don't know which way it's going to flow.
There. Sorry, Steve. Final word to you.
no, I mean, I mean, not to speak specifically on that case, but I think that I think there was a time in the market where you could almost hammer your price down to like, wow, this is like a really low price, and it felt like there was just even then there might be no bid. Where we were just in like we some points during the year last year and the year before at certain times of the market, it felt like there was no bid in certain segments. Like it just didn't even matter. You're better off just rent it out or take it off. I think we're at a place now where there is bids. I think the market is clearly like it's moving. It's now transacting. People are off the sidelines. They are willing to transact. They are transacting, but they're just not transacting at prices that a lot of sellers might be happy with or what they used to be 24 months ago. But I think we're now in a market where things are actually moving. Yeah, it's going to take longer. Instead of 2 weeks, it still takes 6 weeks to sell, but things are moving. So I think that's just the environment that we're in today. And I think that I think probably will be in for my guess is in 2025, probably a similar market where things will be moving, but more balanced.
Great. Well, I hope that helps my friend. I know she's an avid watcher of our show, and I think I found that very useful, our discussion today. So I hope all our viewers and listeners found that helpful. As always, you can reach at Steve Soretsky on X Twitter and at John Pisalis on the same. And the show, you can reach us at Move Smartly on X Twitter as well. And we have other social media contacts and other good stuff in our show notes. As always, we thank you for your support. Please like, share, tell a friend, write a positive review wherever you're catching the show from. And I look forward to having the roundtable again back next month.